All right, so let's talk about something absolutely wild that's happening in the markets. It's this collision, right, between internet culture, memes, hype, social media, and the super serious world of Wall Street. And the big question we're tackling today is, what on earth is going on when a viral meme can make a company's stock just explode? I want you to think back with me. It really wasn't that long ago. The world was, well, it was a weird place. A lot of us were stuck at home, maybe had a little extra cash, and there was this growing sense of frustration with the whole financial system. And then, out of the depths of Reddit, this community of regular, everyday traders kind of banded together. They started organizing, sharing ideas, and they basically decided to take on the financial giants. It was a full-blown rebellion that pretty much nobody saw coming. Now, you probably thought that was a crazy one-off event, right? A strange fever dream from a very strange time. Well, guess what? That same market madness, it is back.
Okay, so to really understand what's happening today, we have to rewind and look at the original playbook. We need to dissect the event that started it all. And that, of course, is GameStop. So at the beginning of 2021, everyone saw GameStop as a dinosaur. You know, a relic from a bygone era in a world of digital everything. And the big Wall Street hedge funds, they saw a company on its last legs and a chance to make a lot of money from its failure. They did this through something called short selling.
So what is short selling? In simple terms, it's a bet that a stock's price is going to go down. You borrow shares, sell them immediately at the current high price, and then you wait. If the price tanks, like you predicted, you buy the shares back for cheap, return them to whoever you borrowed them from, and you keep the difference. It's a high-stakes bet against a company.
That is the billion-dollar question, isn't it? What happens when you bet everything on a company failing, and instead, it starts to take off like a rocket?
Well, you get what's called a short squeeze. When the price rises, those short sellers start losing astronomical amounts of money. To stop the bleeding, they're forced to buy back the stock they owe. But all that panicked buying creates a massive surge in demand, which, you guessed it, sends the price even higher. It's a vicious, accelerating cycle. The result was absolutely staggering. Redditors figured out just how many big funds were shorting GameStop, and they piled in. The stock price went from just a few dollars a share to almost $480 in days. A financial rebellion was in full swing. Okay, so fast forward to today. That market madness is back, but the same playbook is being run on a whole new set of companies. We're seeing names like Opendoor, Krispy Kreme, yes, the donut company, GoPro, and Kohl's suddenly just surge. Now, on the surface, these companies have nothing in common. But if you look under the hood, you find the common thread. They're not doing great financially, and there's huge amounts of money betting against them. Let's look at Opendoor. The company hadn't seen a profit in 3 years, and its stock was basically worthless, sitting at 50 cents. Then, a single tweet from a hedge fund manager suggests it could hit $82, and that was all the spark it needed. The reaction was just instantaneous. Retail traders jumped on it, and driven by literally nothing more than the hype from that one tweet, the stock price shot up by an incredible 400%. And Opendoor wasn't some fluke. We're seeing this exact same pattern again and again. You look at the charts for these different companies, it's the same story. A struggling stock followed by a sudden, sharp, almost vertical rally that seems to come out of nowhere, driven entirely by social media momentum. And this is the absolute key. None of these companies suddenly released a game-changing product or reported record profits. No. The one thing they all had in common was that lots of institutional money was betting on them to fail. And for the meme stock crowd, that's like blood in the water. It's the perfect setup for another squeeze. But this is where the story starts to get a bit more complicated. Because, while some of this activity has that David versus Goliath feel to it, the line between a grassroots rebellion and just blatant manipulation is getting really, really blurry. A lot of this activity follows a classic and pretty nasty playbook, the pump and dump. It starts with a few insiders quietly buying up a cheap, little-known stock. Then they use social media groups, think Telegram or WhatsApp, to manufacture a ton of artificial hype. New, unsuspecting investors see the buzz and pile in, afraid of missing out.
That demand pumps the price way up, and then the original players dump all their shares at the peak for a huge profit, leaving everyone else holding a stock that's suddenly crashing. So this brings us to the big question. Why is all of this happening again, right now? What are the conditions in the market that are making this new meme wave even possible?
Well, if you look at the big picture, it's pretty much a perfect storm. You've got U.S. markets hitting all-time highs. The Fed has stopped hiking interest rates, so there's more cash, more liquidity flowing through the system. All this means investors are more willing to take big risks. The traders who got a taste for this in 2021 feel emboldened, and these struggling penny stocks, they become the perfect targets for this kind of explosive, high-risk game. And here's the crucial warning. While hype can absolutely move markets, it's so important to remember the risk. Yeah, a company like GameStop can sometimes use all that attention to actually raise money and improve its business. But that is the rare exception, not the rule. For every one of those stories, there are so many more where everyday investors get caught up in the frenzy and end up losing big when the hype inevitably dies. So the next time you see a stock on social media that's going to the moon, just take a second, pause, ask yourself the most important question you can. Is this spike happening because the company's fundamentals are actually stronger, or is it just because the internet found a new toy to play with? Answering that one question honestly could save you a world of hurt. Thanks for joining me.